Hello everyone, thank you for joining us. Today is our weekly market alert video for Friday, September 5th, 2025. Thank you so much for joining us. I'm Jordan Roach, the Chief Investment Officer for Retirement Planners of America. And what you'll notice again, like last week, is Ken's not with us. He's still on vacation, still living that second childhood without parental supervision, though he is not retired yet. He sends his regards, but there's a lot to talk about, so let's go ahead and dive right in.
Retirement Planners of America, RPOA.com.
Thursday and Friday, we've had a lot of jobs data. We've had initial jobless claims, we've had payroll data, we've had the unemployment rate, and I think the market's getting a little bit worried. But it's also in some ways getting excited. The interesting thing we saw today was we had payroll data be very, very weak. Maybe it's showing signs that the market, the jobs market, the labor market is deteriorating a little bit. Cracks are coming in. And the market started actually off on an initial jump this morning on Friday, and it's sold off since. So again, like we've talked about before, the first hour of trading a lot of times is not the initial reaction. You want to see how things go afterwards. So what does it mean? Well, I think actually, today the market being down after some poor jobs data is not necessarily meaningful. Again, we've had a pretty good week this week overall. So one day being down, I don't think is necessarily a bad thing. But I do think it's going to probably give the market very strong hope that we're going to lower rates. All right, we have the September Fed meeting coming in 2 weeks, the 16th and 17th. And we've had probabilities go that it's almost guaranteed the Fed was going to cut. Then we had some high inflation prints thinking, maybe they won't be able to. And now we're seeing some deterioration maybe in the labor market. The market, again, is starting to price in Fed cuts. And we're seeing yields drop down to almost lows that we've seen from 12 months ago today. So it's going to be really interesting. Now, I think the main thing we're going to think through and wrestle with is which is true. Is jobs weak, which signals a weakening economy or maybe going to be a weak economy, or is actually the economy doing quite well overall? I think right now, if you look into the jobs data, a lot of the negativity has been around what employers expect to do going forward. Well, unemployment rates are very, very low. There is still a lot of looming uncertainty. So for employers that are surveyed to say, well, I don't plan on adding a lot of new jobs, I don't plan on doing a whole lot of new hiring, I don't know if that's really that big of a surprise at all. Again, we've been in this kind of low 4% unemployment rate since, for the last 4 years, the last 3 years. And at some point, it is going to tick up. So if we actually look at the economic side of the house, not just the jobs data, we've actually had more positive surprises versus estimates than negative. So I think the economy is churning. And I think some of the reason that we have hope or optimism going forward is that if the Fed is going to be able to pull rates down, that could spur economic activity. That means borrowing, access to credit is easier. It's cheaper. That maybe means people can refinance their auto loans, their mortgage rates, their credit cards. That can improve cash flow for not only institutions, but just the everyday people, just you and I out there. And that could continue this next leg that we're hoping for in the broader market cycle. So I do think there is optimism, but I do think the market broadly right now is pricing in the Fed has to cut rates to shore up the labor side, the economic side, because again, inflation data has been pretty quiet. Outside of one print, pretty quiet over the last 3 months. So again, we'll see what the Fed does in a couple weeks. It'll be interesting. Now, what I would say, and I had a good conversation with one of our clients this week, a good one with a prospective client. The questions that I'm getting a lot of is how long, though, can this continue, right? We have this AI theme. We have high, valuations. The market's been blowing and going largely point to point over the last 14 years. At some point, we have to have an 08, don't we? Is now a bad time to invest? Now, we don't know. We don't know, right? We've also seen in the last few years 3 bear markets every other year in the last 5 years. Right, so maybe that is enough for the market to recalibrate things to where maybe the market's not going to need a big reset like we're used to. Maybe an 08 is not coming. Now, I don't think personally that's probably the case, but it is interesting to think that structurally there's been a lot of negativity, a lot of downward and upward market action over the last 15 years. And maybe this new structure of the market, the new regime, is maybe the big 08s don't have to be right on the horizon for us. So we don't know. Now, what we try to do, as everyone knows with our invest and protect strategy, is provide that discipline framework for when we would take corrective action. for when we would say we want to do something. Because it's very easy to look at all of the headline news, to look at all the data and say, it's all bad. I don't want to invest. And what would have happened in the last couple of years, as all this negativity kind of persists and permeates, you miss out on a lot. The other thing that people can do, and this would be when the market's already down, is assume that it has to be better at every little glimmer of hope, and the market turns lower. So what we're trying to do is just provide a consistent framework to know, when do we want to be offensive, when do we want to start thinking about defense. And so that's how we use that framework to hopefully make good decisions. So a lot to think through. September is going to be an interesting month. Broadly, if you go the last 3 years, we have seen pullbacks, downturns every August, September period. So with the Fed coming in, with the market being wound up the way it is, I wouldn't be surprised to see it again. But broadly, we do think the Fed, if they do cut, will probably be good through the end of the year. So we'll see where this goes. Again, let us worry about this boring financial stuff for you. Let us hopefully bring that peace of mind. What I would say, please, is subscribe, to our podcast. Let us know if there are things that are on your mind that you'd like for Ken and I to discuss, to think through, outside of just the things that are already on our mind. Please give us that feedback. Very helpful to us and hopefully helpful to you guys as well. So thank you so much for listening to this week's Market Alert. Look forward to talking to you guys again in a week. Thanks so much.
Retirement Planners of America, RPOA.com.